Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the global economy because Donald Trump has come out and said that he's going to apply even more tariffs against more imports into the USA. And the problem that this is going to have is that firstly, it's going to have a big impact on the United States economy. And we'll talk about what will happen with regards to inflation and interest rates and potentially growth in the USA. But also it's going to have an impact on all of the other countries that Donald Trump is applying these tariffs against, because firstly, they're going to see a fall in their exports and their export revenue. But secondly, it's very likely that these countries will follow suit. They will apply similar tariffs against the USA. And all of this is going to push up prices across the world. It potentially will therefore raise inflation and interest rates and could lead to a global slowdown. So let's firstly hear what Donald Trump had to say with regards to reciprocal tariffs. So basically applying the same tariff against countries that those countries are applying against imports from the USA.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply it's if they charge us, we charge them. That's all.
When does it go into effect, sir?
Almost immediately, but I'll be announcing the details of it, highly detailed, and it'll be great for everybody, including the other countries.
So in terms of assessing the potential impact of these reciprocal tariffs, let's have a look at the average tariffs that are charged by the USA's 15 largest trading partners. This chart shows the average tariff applied against imports by the USA and its 15 largest trading partners. And as you can see, there are two different bars for each country. The darker bar shows the simple average and the lighter bar shows the trade-weighted average. But we'll just focus in on the simple average here because I don't have the full breakdown of how the trade-weighted average has been calculated. But as you can see, the USA on average is charging a tariff of 3.3% against its imports. And if you quickly scan down this chart, you can see that that is actually the lowest rate charged by any of the 16 countries shown here. So I think this is the driver why Donald Trump is wanting to increase the tariffs against lots of different nations, because he's seeing that they're charging higher rates, and therefore he's now said that if you're going to charge it on US imports, we're going to charge it on your imports. And if we zoom in and have a look at the specific rates for each of these countries, you can see that Mexico is charging 6.8% compared with 3.3% for the USA. So that's a differential of 3.5%, which is actually quite large. But in reality, the situation is worse than that because there's a free trade agreement in place historically between the US and Mexico. So if the US does apply a rate of 6.8% against all Mexican imports, that would be a huge increase in the cost of all of those imports. And that would have both an impact on Mexico's export values, but also would raise prices in the US. The average tariff charged by Canada is 3.8%, which is 0.5% above the 3.3% for the US. However, the same situation applies for Canada as it does for Mexico. There is a free trade agreement in place for the majority of imports. So if the US does apply a rate of 3.8% against Canadian imports, that would also represent a huge increase in the cost of all of those imports. The average tariff charged by China is 7.5%. And I think this is an interesting one because Donald Trump recently applied a carte blanche 10% tariff across the board against all Chinese imports. So the US now is applying a higher tariff than China is applying against US imports. And China has come back and said that it's now increasing the tariff on certain US imports. So this is really the start of the trade war between the two largest economies in the world, which is bad news for both of those economies and also the global economy. And if we quickly run through the rest of the countries on this list, you can see that Germany is charging 5%, Japan 3.7%, South Korea, where there's also a free trade agreement between the USA and South Korea for certain imports, is charging 13.4%, which is 10.1% higher than the US is charging on average. Taiwan is charging 6.5%, Vietnam 9.4%, the UK 3.8%, India 17%, which is materially higher than the 3.3% the US is charging. The Netherlands, Ireland, Italy and France 5%, as they're all members of the European Union, and Brazil 11.2%. So if the US is now applying reciprocal tariffs against all of these nations and every other country in the world, what we are going to see are two major impacts. Firstly, we're going to see an increase in prices in the USA because all of those things that are being imported are going to cost more because this tariff will be applied to the price. And we will also see a fall in volumes and revenues from all of the countries that are exporting to the USA because simple economics tells us that when the price of something rises, consumers either reduce the amount they're spending on it or they will look for alternative options. And I think this is one of the drivers from Donald Trump's perspective. Firstly, he wants to make some revenue from the tariffs. And secondly, he wants to give US companies a chance to be able to sell their products. So from a big picture point of view, I can see why he wants to do it. But the danger is that it's going to push up inflation in the USA, and that will have a knock-on implication for other parts of the economy. In addition to the reciprocal tariffs that Donald Trump announced on his Air Force One flight to the Super Bowl, he also announced tariffs on steel and aluminium, or aluminum, depending on which side of the Atlantic you live.
We'll also be announcing steel tariffs on Monday.
On this, tomorrow?
Monday, yeah, tomorrow.
What countries will those go on?
Everybody. Steel.
Including Canada, Mexico,
Yeah.
United States?
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
25%.
The key driver for introducing these tariffs is to protect US industry. Donald Trump wants to make sure that the steel and aluminum industries in the US are competitive. However, the problem that it's going to cause is that it's going to increase the cost of all of those imports. So let's start off by looking at steel, because the USA imports around 25% of all of the steel that it needs. This table, produced by the United States Census Bureau, shows the total volume and value of steel imported into the US in the 12 months to September 2024. And we've got a breakdown here by the country of origin. And what this shows is that in the 12-month period, the US imported over 20 million metric tons of steel with a value of more than $24.5 billion. And the biggest single source of that steel was Canada, which supplied around 22%, which equated to over $5.6 billion. The second biggest source was the European Union, which provided 21%, or $5.1 billion. The third largest market, providing 11%, was Mexico, followed by Brazil providing 10%, Korea supplied 9%, Japan and Germany both provided 5%, Taiwan 4%, China supplied 2.5%, the Netherlands 2.1%, and Austria 1.8%. So if we assume that the US imports a similar amount of steel over the next 12 months, $24.5 billion, the additional 25% tariff that will now be applied against all of those imports would represent an increase in cost of $6.1 billion. So that would be added to the cost for all of the companies that are importing steel. Now, Donald Trump wants to protect the steel industry, and this will help in terms of price competitiveness. But the reason why the US is importing such a large amount of steel is because the cost in the US is too high. Companies that are buying in steel would rather buy in imported steel at a lower price to make sure that their products can be cost competitive. So what we're seeing here is an increase in cost in the USA. There potentially will be a reduction in the amount of imports, and some companies now might buy from US producers. But overall, the prices will go up. That will increase costs, and that potentially will drive up inflation in the USA. As we saw earlier, Donald Trump has now announced a 25% tariff on all imported aluminum. And this potentially will have an even bigger impact on the US economy because over the last 12 months, the US imported $30 billion worth of aluminum. So this is actually bigger than the amount of steel that it imported. And around 79% of that came directly from Canada. And historically, there hasn't been any tariff applied against that. So if you apply a 25% tariff on that $30 billion, it's going to add another $7.5 billion to the costs for all US businesses that are importing that product. And the reason why the US is importing 50% of its aluminum requirements is that it can't produce enough itself. And it's interesting to note that when Donald Trump was in office first time round, he also applied a 25% tariff against steel, but only a 10% tariff against aluminum, because I think the economic impact was going to be too great. So it will be really interesting to see whether or not these tariffs are maintained at 25%, because if they are, lots of different businesses in the USA are going to see a huge increase in their costs. And we're also going to see a major impact on the Canadian economy, because if you're exporting such large volumes directly to your neighbour, and then all of a sudden the price of those imports is going to increase by 25%, there is a real risk that there's going to be a reduction in the volume and the value. And it's likely also that Canada is going to apply a 25% tariff against certain US imports. It might not be aluminum, because obviously the US is a net importer of aluminum, so it's not exporting any of that product directly to Canada. But I'm sure Canada will draw up a list of other products that it can apply a 25% tariff against, so that will push up inflation in Canada, but it will also have a damaging impact on any companies that are exporting directly to Canada. So what's the summary and conclusion today? Well, I wanted to post this video because we've been following closely what Donald Trump has been announcing in terms of tariffs. And the problem with these tariffs is that they have a knock-on impact to all of the other economies, because if your exports are suddenly being hit with a tariff, that means that they're going to be more expensive when they go on sale in the US, and therefore US consumers are likely to buy less of your product. You're going to see a fall in volume, a fall in sales, and all of the companies that are currently exporting to the US are likely to see a fall in their profits. That means they'll pay less tax in your economy, and so your economy will start to slow down, and you might see a reduction in the growth of your GDP. So this is having a really big impact on other economies, but it's also going to have a really big impact on the USA, because what we're going to see is an increase in prices. One of the reasons why US businesses have been struggling to get so much business is because imports are cheaper. Now, from a big picture point of view, as we discussed earlier, it makes sense if you want to promote your home businesses to increase the cost of those imports, because it gives everybody more of a chance to sell more products at a higher price. But fundamentally, what it will do is increase prices in the USA. It will push up inflation. And if we quickly take a look at what's been happening with inflation in the US over the last few months, you can see that from the low point of 2.4% in September, inflation has been rising again. And the latest data published for December shows that it's now up to 2.9% against the target rate of 2%. And this rise in inflation throws a question mark over what's happening with interest rates. This chart shows the movement in interest rates over the past 5 years. And as you can see, over the past 5 months, there have been 3 reductions in interest rates. And the rate has fallen from the previous level of 5.5% to the current rate of 4.5%. Now, it was previously expected that the Fed would continue cutting interest rates as we move through 2025. We may have seen another 2 or 3 interest rate cuts. However, if inflation is now going to start rising again, the Fed is likely, firstly, to stop any future cuts, but secondly, may start increasing interest rates again if inflation starts to get out of control, if it gets back up to 4 or 5%, which it could do with this overnight 25% increase in the cost of all imports that Donald Trump is now talking about. And the other problem that the US economy is going to suffer from is that if other countries apply reciprocal import duties on all of their exports, companies in the US that are exporting overseas are likely to see a reduction in the amount and volume of their exports. Therefore, their profits will start falling. They'll contribute less to the US economy, and GDP may start to slow down. So there are some really big implications of these 25% tariffs that Donald Trump has announced on his Air Force One flight to the Super Bowl. And it'll be really interesting to see, firstly, if he does follow through and if all of these tariffs are applied, and secondly, what the global reaction is, because if everybody starts tariffing everybody, then what we'll see is a global increase in inflation. That means that interest rates are likely to start rising globally again. That's going to be bad news for companies and individuals who need to borrow money. That means there's likely to be a slowdown in investment, and all of this could lead to a slowdown not just in the US economy, but in the global economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.